The Bitcoin death cross. It's going to zero, right? No, this is absolutely ridiculous. We've been seeing this in the headlines all over the place right now. The death cross just happened in Bitcoin. Look out below. It's going to zero. No, seriously, no. First off, let's talk about what is the death cross. What is it actually, and where is Bitcoin going from here? So first off, all you need to know about the death cross is that it is moving averages crossing over each other. A lower time frame moving average is crossing over a longer time frame moving average, creating a death cross. OMG. Well, guess what? There's the same thing that happens when it goes up. It's called the golden cross. Wow, look at it. It's going toward the stars. Yes, okay. Here's the thing. Who cares about what moving averages are doing? I'm just saying, they are lagging indicators. Just like all the other indicators that are on your screen, along with moving averages and everything else, they are all lagging. Who cares about indicators? Learn how to read a price chart, and you can indicate where price is going in the future. That's all you need to focus on, price, because here's why. Doesn't matter what we're looking at. We could be looking at stocks, ETFs, cryptocurrency, futures contracts. We can be looking at commodities, precious metals, bubblegum wrappers, or cows and pigs. It literally does not matter what we are looking at. It all comes down to one thing: supply and demand. How many willing buyers and how many willing sellers. That is what indicates price on any given asset class. Literally anything. So, with that being said, when it comes down to supply and demand, how does that relate to this whole thing, the death cross? Oh my gosh, the death cross. Who cares? Seriously, it's all about the headlines. Here's the thing. Let's think about this a little bit further. When trading any asset class, like I said, stocks, real estate, commodities, ETFs, cryptocurrencies, futures contracts, you could be trading oil, gold, silver, precious metals, anything. You could be trading coffee, orange juice, cattle, nothing. It does not matter at all what it is. But it all comes down to supply and demand, and you have to remember, it is all about counterparty. Everything out there, when you go to place a trade on anything, it does not matter what it is, there is counterparty. You are possibly buying something and you're buying it from a willing seller. When you go out to sell, you're selling something to a willing buyer, right? Counterparty. Here's the thing. You see this happen time and time again in the equity markets with stocks. I mean, literally everything. When something is created, like a headline is created, what follows it up then, right? Usually a surge of buying or a surge of selling. Well, guess what? Who is the counterparty on the other side, buying from typically or selling to typically the retail buyer and or seller? Who it is typically the institutions, banks, hedge funds, all these other ones, pension funds, the big guys, the people who are playing with billions upon billions of dollars. These are the guys who indicate where the market is actually going. It's not the retail traders, even though they've been kind of pumping and dumping some of these, meme stocks, things like this. Yes, it can be done, squeezing a little bit through short squeezes, stuff like that. But for the most part, the guys who indicate where the market is going and what is going on with it are the institutions, the guys who have huge bankrolls, billions upon billions of dollars that they are trading with. So here's the thing. You got to look at this from an objective standpoint. When there's headlines all over out there in the world right now saying, OMG, the death cross in Bitcoin just occurred, what is that giving a signal to? It's giving retail traders a signal, oh my gosh, you got to sell because it's going down. Well, guess what? Retail traders jump in because they see this headline out there. The death cross just happened. This means we're going to lose a lot of money right now, so we got to sell now. Well, here's the thing. All the hedge funds, all the pension funds, all the guys out there, the banks, the institutions, the guys out there with billions of dollars and huge accounts who want to get into Bitcoin are saying, yes, please, retail traders, why don't you go into your little accounts there, sell your half of a Bitcoin or your tenth of a Bitcoin to us because we want to buy, 10,000 Bitcoins today or whatever they want to buy. So how can they achieve that? They need counterparty. They need people selling. How can they get that? Well, a simple headline simply saying, the death cross just occurred. would indicate to the retail trader, you should go out right now and sell all of your Bitcoin. Now, again, this is not trading or investment advice in any way at all. I'm just giving examples. But my point is, when something significant happens like this, like moving averages crossing over each other, who cares? It happens all the time. Happens all the time. Who cares when it happens? Here's the thing. It just gives people a reason to go out and buy or sell. Meanwhile, the guys with all the money are the guys on the other side of the trade, taking the other side of your trade. Get what I'm saying? So here's what you want to look for. When you see these big headlines come out like this, the death cross, like this, a lot of people are running out and selling. Well, this is typically a good time to maybe look at some of these positions and think, maybe I want to get into something like this and maybe buy against all of the weakness. But again, this is not buying or this is not trading or investing advice at all. You got to figure out what's best for your situation. I'm just running through some very general situations. This happens on the upside as well. When we see headlines come out that say, oh, this stock or this meme stock or this crypto is going to the moon, let's buy it all. Well, who's probably on the other side selling it, right? You always got to think about who is selling that product to you, right? In this case, it is Bitcoin, it's crypto, it's stocks, it's ETFs, it's commodities, whatever. You got to think about who's the other guy selling this and why is that guy selling it to me, right? Who's the fool at the table, right? Just like when you play poker, if you don't know who the patsy is at the table, probably you should look in the mirror because it's probably you, right? Yeah, I've been there, done that. I've been that guy, unfortunately, a couple times because I didn't know and I thought, wait, who's the guy at the table? Oh, yeah, it's me. Whoops, I got to go. You know what I mean? So here's the thing. When some of these headlines hit, you got to look at other movements in these asset classes, whatever they are. You got to look at them and see. You got to wait for capitulation. Now, what is capitulation? Capitulation is a huge move, typically on the downside. A lot of times, capitulatory moves on the downside are much bigger than moves on the upside. So let's talk about that, and because we're talking about this death cross. So a capitulation move in something like, let's just say Bitcoin, would be a massive move lower that typically happens over the course of like one day. Now, here's the thing. Typically, it moves down over the course of a few days, maybe a couple weeks leading into it. And then all of a sudden, one day, it's like somebody pulls the bottom out and all of a sudden it collapses by a huge percentage over just that one day. So here's the thing. A capitulation move is something that moves it moves really low, like it moves much lower as a percentage basis in a short period of time, right? Typically on very high volume. Then, all of a sudden, out of nowhere, it seems like magic comes into the air. And all of a sudden, maybe we get a headline that says something like, Bitcoin miners are allowed to mine in these 10 states, or something like that, or in these 20 countries. And then all of a sudden, out of nowhere, magic happens, and price reverses, and rocket ships higher. That's basically a capitulatory move, provided it's on very high volume, it's after already a big move lower, and then we see a huge move lower, high volume, and then all of a sudden it pegs a bottom after moving much lower and goes basically parabolic higher. Now, if you're somebody who watches candlestick charts, which if you're not watching charts, you should be watching charts, and you should probably be watching candlestick charts. If you're watching a candlestick chart, you're typically going to see a huge red candle moving straight down, and then all of a sudden, it's going to peg a bottom and move much higher. If you look at it on a higher time frame, maybe like a daily chart, something like that, it's going to appear as a big candle going straight down. By the end of the day, it typically ends with a huge wick on the bottom side, indicating a bunch of buying pressure that has come into that asset class, whatever it happens to be, and by the end of the day, it typically closes much higher off of the bottom. Now, it'll probably still close as a red candle. Doesn't matter. Does not matter at all. What you want to see is the bullish activity moving into whatever that asset class is, creating a big wick on the bottom side of that red candle, right? That's what you want to look for, is the big wick on the downside. Provided it's a huge candle on big volume after a big move lower already in previous days, that's probably your capitulation right there. Capitulation typically marks the bottom in something, and capitulatory moves on the move lower, on the downside move, is typically much, much bigger than it is for upside capitulation. The reason for that? Straight up fear. People are scared. People are scared because it's moving lower really, really fast. So what do? When all else fails, sell. That is the worst thing you could possibly do. In fact, you should be looking for opportunities to buy. When you see capitulations, you should be drooling, thinking about, hey, what can I buy right now? Things are on sale. We are in a clearance situation right now. People are desperate to get rid of their positions. How can I be the good Samaritan, come in and buy from these people who want to sell me their goods for very low prices, right? Get what I'm saying? So, the moral of the story is the death cross. All of these headlines on the death cross. Who cares? Who cares one bit about a death cross? Look at it more from the standpoint of where is the opportunity? All of the people who are selling because of the headlines saying a death cross is here. How can we get into this market and buy something on sale? That's what you should be looking at. Where are the sales? How can I get in? How can I buy something 50% off? Just like at the store. When you go to the store and you see something that you love, it's something, whatever it happens to be. Maybe it's a pair of shoes. Maybe it's some kind of food item. Maybe it's a fancy shirt. Maybe it's a car. Let's just say this. Let's say this. Everybody likes a car, right? Let's say you go to the Lamborghini dealer. You're standing there at the dealership. Your favorite car is $300,000, right? $300,000. All of a sudden, for some weird reason, this phenomenon happens, and all of a sudden, the price continues to tick lower. Lower, 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 it goes down to $200,000. All of a sudden, you're thinking, whoa, this is crazy. I wanted this car, it was $300,000, now it's $200,000. And it keeps going lower and lower and lower. All of a sudden, it pegs at $150,000. And you have, let's just say you have the money. You were really hesitant to buy at $300,000. And all of a sudden it's $150,000. Would you buy it? You'd probably step in immediately and say, hey, sign me up. I'll take two. Because you know you could probably turn around in 3 days later and sell it again for $300,000. You know what I mean? So that's the kind of move you're looking for. When things go on sale, be the willing buyer. Be the guy looking around for the sale. And how can you get in at a much lower price, 50% off, and buy more? You know what I'm saying? So buy more. Buy whatever it is that you want on sale. So that's kind of the thing with behind these headlines, like a death cross. Basically, all it's doing is it's just telling the world, hey, everybody, go out and sell your Bitcoin, please, because we need some counterparty so that we can buy up everything. That's basically what it is. So anyway, think about when you're out there buying or selling anything, think about it. Who's the person selling to me? Who's the person buying from me, and why? Why is that person buying right now? Why is that person selling right now? Get what I'm saying? It's all about the counterparty. You got to look at the other positions out there. So anyway, again, this is not trading. This is not investment. This is not financial, tax, accounting, or any kind of other advice in any way, but rather this is just talking about death cross and some of the things that you want to look at when looking at any type of asset class for investing purposes, right? Buy when things are on sale. Yes, it's the way to do it. So anyway, hope you enjoyed this. Make sure to hit that subscribe button right down below the video if you enjoyed it. Even if you didn't enjoy it, make sure to subscribe anyway so you can see more of me ranting and raving about nothing. All right, anyway, thanks again, everybody. I truly appreciate it. Enjoy your day, and I will catch you in the next video. By the way, go back and check out some of my other videos right here on the channel, as I have 1,200 videos right here for you to enjoy. Thanks again.